All righty.
Are you?
Thank you so much for joining us this morning. Um, just making sure, okay, we are live, so that's exciting. This is the Low Income Taxpayer Clinic at Lewis and Clark Law School. And I have with me Anna Hong, John Siminovich, and Bradley Valandra. Take it away.
Hi, like Chris Laura said, I'm Anna, this is John, and Bradley. We're doing an intro to tax class or intro to tax advocacy project to kind of educate high school students and maybe recent graduates on basically tax terminology and what the benefits of filing your taxes are. Our intro to tax advocacy project to kind of educate high school students and maybe recent graduates on basically tax terminology and what the benefits of filing your taxes are. So we're just going to start with an general overview of tax. Generally, everyone that earns a certain amount of money has an obligation to file taxes, but there are also really good reasons why you should file your taxes, even if it's not required. And I have in the box there the amount that you need to make in order. General overview of tax. Generally, everyone that earns a certain amount of money has an obligation to file taxes, but there's also and just under 28K if you are filing as married. Yeah, thank you. So some good reasons to file your taxes. There's plenty of more reasons to file your taxes. Your taxes go to school, public benefit programs, etc. They also go to bridges and roads. But really the main reason we want to file our taxes is to run the clock on the statute of limitations. Oh, yeah. So you have to go back. Yeah, sorry. Oh. Sorry, yeah. So you guys run the clock on your statute of limitations, the time, which means that there are two main statute of limitations that we have to keep an eye on. So the first one is the time for the IRS to assess your tax. After you file your taxes, the IRS gets 3 years from the date you file to assess your taxes, or to find fault in your taxes. And so if after the 3 years come up and the IRS tries to say that you missed out or that you owe money, to the IRS, they can't do that because they already had their 3 years, so it sucks for them. And then the other one is for debt collection. So if you have debt, the IRS will forgive your debt after 10 years after the date of assessing your taxes. And however, another reason to file your taxes is that you get money. So you should file your taxes within 3 years of the due date to get your refund. And then this is we're a little quick on this, but if you never file, you can never run the clock. All of these statutes say that you have to file first before you can get your refund, before the IRS can assess your taxes, or to start your 10-year debt forgiveness.
All right, some quick facts that are important to know if you don't remember anything else. Remember these. The Internal Revenue Service, the IRS, is a government agency that oversees federal tax policy. And the IRS website provides a lot of instructions and relevant information to help you successfully file every tax season. States also collect taxes, but the IRS doesn't deal with them. So it's important to make sure both are taken care of. Who has to file? Generally, everyone who made at least 13,850 last year do. It's important to check back every year because it does change. When? April 15th, same date every year, unless it falls on a Saturday, a Sunday, or a legal holiday, and then it's the next business day. How? Through either a guided software program, a tax prep, or a form that you can just manually send in. Most well-known options for these softwares are usually TurboTax and H&R Block, but there are a lot of different options. The cost is always free. What ends up costing money when people do pay for their taxes is usually the act of the prep itself by someone else. But if you meet certain requirements, filing should always be free, even with assistance. So there are 4-ish categories of people who have to file every year. This is the first category, citizens and residents. This chart shows who has to file for 2023 based on where you fall. And as long as you are a US citizen and you meet these criteria, you have to file even if you're out of the country that year. Dependents. A dependent is a qualifying child or relative who relies on someone else for financial support. Even if you're claimed as a dependent, you might still have to file as well. If you follow this chart to determine if you also need to file as a dependent, and generally minors are still responsible for filing and paying on their own. An exception to this rule is individuals under 19 or full-time students under 24 are usually don't have to file, and your parents can elect as long as you meet certain criteria. Self-employed persons. You're considered self-employed if you are a sole proprietor, an independent contractor, a member of a partnership, or you're in business for yourself in any way. For example, if you drive for Uber or Lyft or DoorDash, etc., you qualify as an independent contractor. Good news, you just follow the same chart from the citizens category. The bad news, you will probably have to file an additional form if you make at least $400 or $100 if you work for a church while self-employed. Undocumented individuals and non-residents. You will still have to pay even if you do not have US citizenship. If you qualify as a resident, that means you are lawful permanent resident at any point during the past year, so in 2023, or you had a substantial presence during the past 3 years. You just need to follow the same chart again in the citizens category. A non-resident is simple. It just means you don't meet the resident criteria. You still probably have to pay taxes, and the rates depend on if your income is effectively connected with US business or not. And then dual status means you are a resident during one part of the year and a non-resident during the other part. And this is not super common, and it's most likely going to be either your first or last year in the US. And FYI, filing as a non-resident is a great way to prove residency in the future if that is a need. The deadline to file, in general, the due date is April 15th, unless the IRS extends the deadline. For example, they did it during COVID, or the original date falls on a weekend or a holiday. If you decide to serve in the military, special rules apply for members that are serving when taxes are due. If you're outside the US, you get an automatic 2-month extension. And if you're in a combat zone, you get an automatic 180-day extension. If you need more time, if for another reason you need more time, you can apply for an automatic 6-month extension. But just as a reminder, if you owe taxes and you didn't pay them on time, they will build interest and you will have to pay that even with an extension. If you can't pay, the IRS offers a variety of different options to accommodate those taxpayers. And the smartest thing to do is to reach out to a low-income tax clinic like us to help you figure out the best solution for your situation. All right, how to file. You will file your tax return using Form 1040, and the 2 main ways are through a filing software. It does the math for you. It often files federal and state taxes, but it can cost money if your income is too high to qualify for free file. Through tax forms, which are available electronically and by mail. They have to be manually filled out. The IRS does offer a fillable form site, but it doesn't include instructions, but it is free no matter the income level. Many verified options for filing softwares can be found on the IRS website, along with blank forms and separate instructions if you choose to do it manually. Some free services, if you don't want to pay or do it yourself, can be found through VITA, which is a volunteer income tax assistance program, which is operated by certified volunteers. If you make up to 64K in a year, it's a great option for disabled folks and those who are ESL speakers, English second language speakers. A great option for this in Portland is Cache, Oregon, and we have their information at the end. But remember, don't forget to file your state taxes and make sure whatever you do includes that, or you figure it out on your own. All right, the IRS Free File Program. Like I said, it should be free. The IRS has partnered with 8 private companies to provide filing software for individuals that make 79,000 or less. If you make more than that, you can still file for free using the forms. And I included the link at the bottom if you want to access either of those options. IRS Direct File is a really cool new program that allows you to file directly with the IRS. It provides free electronic filing services with certified tax assistance on standby directly through the IRS instead of a private third party. It's still a really small program with very limited availability in these states that are listed, but it's really worth keeping an eye out and supporting it if and when it's available for you. All right, what you need to file are all of this personal information, your social security number, or your individual tax ID number. To learn more about an ITIN, we do actually have another presentation this afternoon that discusses the functions and benefits of an ITIN, which is available in both English and Spanish, if anyone needs that. For income documentation, it's any record of payment that you may have received, any forms that from places that paid you, and business expenses if you are self-employed, credits or deductions, documentation for that, any childcare expenses or any other dependents you may be responsible for, any donations to charity, which the Goodwill donation slip does not count. It's not really regulated, just as proof for charitable donations, FYI. Next, we will go over the different forms and documents that you should be aware of when filing and the importance of withholding.
So here's a list of the most common, like the most important tax documents that you're going to see, just because there's always a lot of numbers attached to them and it's good to know what those numbers and those forms mean. So first, your form 1040 is your general tax return. Your form 1040-X is your amended tax return, in case you make a mistake on the first tax return, because, you know, we get it, everyone makes mistakes, and so the IRS allows you an opportunity to amend your tax return if you need it. You have a W-2, which is just your wage statement. Your employer is required to send this to you every year, but sometimes they might just tell you to like, hey, like come pick it up, but they should have it prepared for you so you can request it from them. Your 1099 is your other earnings or interest statements. Generally, these will also be sent to you, but you're also allowed to request them if you know that you should be getting one. And then your 1098-T is your tax credit tuition statement. And this is for usually if you're in a school, or I'm sorry, in a college or a university, your school should send them to you or an email to you to tell you how to be able to get this form so that you can file your taxes.
All right, what is withholding? It's the option to have federal taxes taken out of your paycheck each time you get paid. The amount you withheld depends on how much you earn and a form W-4, which you'll fill out when you start a job. And you can always go back and change that later if you decide to. It's a really great way to make sure your taxes get paid without really having to worry throughout the year. Not withholding is a really easy way to accidentally build up a lot of tax debt from not filing or paying your taxes on time. If you do choose to withhold, you're likely to get a refund, which you probably hear your parents talking about around this time of year every year.
And then just some examples from the forms and the pages that Bradley was talking about. So here are the W-2 example. This is what a wage and tax statement would look like. And then I red box the federal income tax withheld, so you know that how much of your taxes was withheld from your paychecks throughout the year. And here's a 1099 example, and again, you can see that there is a box around federal income tax withheld. That's how much you withheld from your 1099. And then here's an example of your tax returns, your Form 1040. I have Redbox 2020, just as a general reminder that each tax year is going to have a different Form 1040 because every year it's a little bit different. So if you want to file your taxes for a specific year, you want to make sure that you're getting the right form whenever you are submitting them. And then we're going to go through how to calculate taxes. This is a really big chart, but we're going to break it down. But essentially, you have what is your income. You subtract from your income your standard deduction, and that's how you get your taxable income. You get your taxable income and you multiply that by your tax rate based off of your income bracket. That's what your tax will be. And then if you have any credits, that gets subtracted from what your tax is, and that is your tax liability for the year. Again, we're going to break it all down because this is a monster of a chart. So what is income? Generally, income is wages, salaries, bonuses, and commissions received by employees for services performed, but they can include a lot of ways in which you earn money. For example, tips. So if you're a food server, a bellhop, or hairdresser, and you get tips for your services, those are considered income. Your gambling and lottery winnings, expensive gifts from your employer, like a car, and any types of settlement agreement, pursuant to some exceptions, but generally settlement agreements are considered income. What is not income? Loans. So if you have a student loan, that's not considered income. Gifts from family members, like birthday money, etc. Like if your family is really generous on your birthday, that's great for you because you don't have to count that as income. So our deductions, we're gonna go through the standard deductions first because it's easier to explain. So for a standard deduction, essentially it reduces the income subject to tax and varies depending on your filing status, your age, blindness, and your dependency. It's important to note that most people use the standard deduction in contrast to the itemized deductions. You can itemize your deductions, but generally they won't be higher than what you would get as a standard deduction. And if you see from the chart here, your income subtracted from your standard deduction or your itemized deduction is what your taxable income is. And because the standard deduction is so high, it's around, I think it's like 13K for single people right now. And so it is generally really high. And you have to get itemized deductions higher than 13K before it becomes beneficial to you. And tax rates, these are always really fun to talk about. So the US uses a progressive tax system, and we're going to walk through it with examples because it's easier to explain. So let's assume that you make 85K a year. Your first 11K is taxed at 10%, and you can see that that's what it looks like in the blue boxes, and so they should correlate to the example. Your next $33,724 is going to be taxed at 12%. And then your next $44,641 is taxed at 22%. Note that it stops at 85K. So this is 85K, subtract the bottom number for the single filers, which is the 44,726, which is in the darker red box on the right. And it's important to note that the tax brackets change every year. So this is the tax bracket for 2023. So this is for last year. But if you are wanting to check on your tax rates for specific years, you'll have to look at that specific year in order to check what percentage and number you're going to be at. And that's how you file, or that's how you calculate the amount of tax that you owe. You take that taxable income that you have, and then you multiply it by your tax rate, and that becomes your tax. We're going to talk more about credits and tax liability. So a credit is a dollar for dollar tax reduction. We're going to use an example because it's easier to go through, I think, examples in order to understand the system. So let's say that I am a 20-year-old college student that has a kid. I can use the American Opportunity Credit and the Child Credit to reduce my tax liability. Let's say for this example that I have a tax of $1,500, meaning that I have to pay the IRS $1,500. So assume for our purposes that a child credit is $500 and the opportunity credit is $2,000. That means that I have a credit of $2,500. What is going to be my tax liability? And if we see in that chart, your tax liability is whatever your tax is subtracted by your credits. So here I have $1,500 in tax and $2,500 in credits. When I subtract those, I get a negative number. I get negative 1,000. That negative means that the IRS is going to actually owe you money, so they have to refund that $1,000 back to you. It's important to note that the credit may or may not be refundable. It may vary depending on your situation. And we should also note that a child credit can go up to 2,000, but it varies. And the education credits are discussed later on, but there is a difference between undergraduate and graduate credits. So those numbers are just used for my example, but you're welcome to look and see what your situation calls for regarding how much credit you are allowed to take. And we're going to talk a little bit more about the difference between an employee versus an independent contractor. So employee, you're doing the work at the instruction of your employer. Most people are employees. When you're an independent contractor, it means you're self-employed. You are your own boss. Some examples of both of these. So for employee, you could be a retail salesperson. You could be one of those fast food workers, office workers. You are working at the instruction of your employer. For an independent contractor, examples of these could be like a photographer, a tutor, an influencer. For instance, a TikTok influencer is really popular right now, but people are independent contractors. So there's pros and cons to these two different classifications, and they're incredibly important. So for an employee, you pay less tax because you pay less for Medicare and Social Security. Your employer has to match the percentage of your income, which I believe is 7%, 7.5%. So let's say that you pay 7.5% for Medicare and Social Security, your employer also has to match that 7% or 7.5% for Medicare and Social Security. As an independent contractor, you have to pay more tax. You have to pay twice as much tax because you're paying on behalf of employee and employer because you are your own employee. You are your own employee. And so you'll have to pay that roughly 15% tax for Medicare and Social Security. However, for an independent contractor, you're allowed to deduct for business expenses. So if you're doing photography and you have a dark room, you can deduct for that. Your car, if you're required to travel, or any equipment that's involved in your employment. But for employees, you can't really deduct as much because your employer will provide most of those for you. And it's important to note that it's common for young students or new graduates to be misclassified, which can lead to them paying more taxes. So you should read what you sign up for. And if you think that you're misclassified, you can always contact the Low Income Tax Clinic and we can help you determine your correct classification. And our information is going to be at the end.
All right, so with all of that wonderful background, let's say that you want to go to college. That's great for you. We love that for you. But it's important to note that you can qualify and your family can qualify for certain tax breaks depending on how you want to use any grants that you're offered or any student loans that you take out. So as a baseline, of course, your status as a student does qualify you for these credits when you file taxes. And we want to walk through how you can keep some extra money in your pocket and later down the line, what you can do about student debt once you get out into the working world. So with respect to loans, it's important to note that this is borrowed money that you will have to repay someday. But the upside is that it's not taxable. And you, as mentioned earlier, you are eligible for an education tax credit if these loans are spent on school-related expenses like tuition, but not living expenses, with an example being something like rent. Of course, the American Opportunity Credit, which I believe, as alluded to earlier, can mean up to $2,500 in tax credits, is available. And as a student, you can also qualify for the Lifetime Learning Credit, up to $2,000. And this, of course, is something that I was in a position to do myself, so I'm a big believer in this. But if your parents claim you as a dependent while you're a college student, you can pass on some nice tax credits to them. So that's just a nice way to say thank you for helping me go to school. And of course, it's worth pointing out that being at college for tax purposes is considered temporary. Your home address is still going to be considered to be your parents' address while you're at school. Moving on to grants, on the upside, this is money that does not have to be repaid. It's typically provided to you in the form of a Pell Grant, but that's not the only kind of grant that you might be able to qualify for. So of course, apply for as many as you can. Grants are never taxable if they are spent on your education expenses, but only on your education expenses. And of course, it's important to think about the fact that paying for your education expenses with a grant can take a little bit away from your educational tax credits later. But depending on your situation, this can be worth it because, of course, you don't need to repay grants. So the balance of credits you might qualify for later versus the credits you qualify for now is going to be something that will briefly work through using the IRS's specialized worksheet. But it's of course worth pointing out as part of that, that if you pay for living expenses with a Pell Grant, it does make that grant taxable to some extent, but that can still be worth it for you. So this is just a brief example where, for the purposes of a family calculating their credits, this is exactly what a student opts to do. They pay a little bit of their living expenses with their grant, which qualifies them, or rather puts them in a position where they do have to take on a small tax liability, but given their total credits, this is actually worth it for them in this situation. And then we have an example here focused strictly on a student where they do the same, substantially the same thing, and strictly with respect to their personal taxes, it still ends up being worth it for them to use their grants, divide up their grants and their loans in this way. So just to briefly comment on your status as a dependent while you're at school, if your parents are helping you through college, you can reduce their tax bill. I love this. It's just a nice thing you can do for them. All you really need to do to qualify for this is just be age 24 or younger. You're going to have to be a full-time college student and living with your parents for more than half of the year. And this is fairly easy to qualify for because the time that you do spend living on campus does not count against you. Last but not least, if your parents are picking up at least half of the cost of your time at college, then this, in concert with the other things we mentioned, is all you need. So be sure to show your gratitude by doing your parents a favor. And then this properly is last but not least. When you get out into the working world and start to repay your student loans, the interest payments you make can lower your tax burden. So kind of an upside downside. Nobody really likes paying down student loans. Nobody likes paying interest on their loans. So qualify for all the credits that you can. There's really no reason not to file your taxes to qualify for everything that you can in that respect, because college and the associated loans are expensive. And as my colleague Anna had pointed out, the tax bracket that you're in is going to make a difference. And with the progressive income tax system that we have, it's set up to give you more of a break the less money that you're bringing. So for example, if you pay about $1,000 in taxes and find yourself in the 15% tax bracket, you could lower your overall taxes by $150.
And then here's a list of some more free resources. So if you get a letter from the IRS, you're welcome to call us or email us at the Low Income Tax Clinic, or drop by on Tuesday, Thursday, 9 a.m. to 5 p.m. If you need tax preparation help, Cash Oregon does a great job for, I think, those less than 64K. If you make less than that, you're welcome to go there. If you need tax preparation help, there's their website and their phone number, and they're open Monday through Fridays from 9 a.m. to 5 p.m. What if you don't have a printer or you don't have a computer to file your taxes? That's okay. You can go to your local library. They offer free IRS tax forms, and they offer them in different languages if you need them. And then here's the link again if you want to directly file with the IRS. I think that's the conclusion of our talk. So thank you for coming.
You all had a few questions in the chat. So there was a lot of questions. Are you guys ready to maybe try to take some of them? And if not, we'll see if we can help. So one of them is, if you do not have a filing requirement, when is your deadline to file?
So if you're not required to file at all,
Yeah, do you have a filing? If you don't have a filing requirement, do you have to file?
you don't have to file, but it is a good habit to pick up. Like Anna said, there is that statute of limitations for different things. And it's just a good habit to build for those years that you do need to file.
Even if you don't have to file, it's a good idea to, because you can get money back, especially if you're a graduate or a new graduate. or you're 18 and above and you can file on your own, because your standard deduction is gonna be likely pretty high in contrast to the amount that you're making, and so the IRS is likely gonna have to give you some money back. And using those credits that you have, like the American Opportunity Credit and the Lifetime Learning Credit, that is a lot of money that you could get every single year for at least the first couple of years that you're starting out. You're not gonna get those opportunities later on, so you might as well file and see if you can get some money back.
Yes, I think the
So if,
takeaway.
yeah, sorry,
Oh.
John, go ahead.
Yeah, I was just gonna say, I think the takeaway is if you're not required to file, you won't be punished if you don't, but you probably should and just see what you qualify for.
And if you do, or if you are entitled to a refund, when is the last date that you can claim that refund?
The last day you can claim that refund is 3 years from the date that you filed, or 2 years after, you pay the tax, but you didn't pay any taxes, so 3 years from the date that you filed, if you're entitled to it.
Or 3 years from the due date of the return as well, right? If you.
Yeah, due
don't
date of the
pay
return,
it.
sorry, yeah, well, even if you file early, so say you file April 1st, even though the deadline's not there. The IRS will say that you filed on April 15th, which was the supposed deadline. And so it's really from April 15th outside some circumstances, like if you have an extension, or if, for example, during COVID, they allowed an extension, so just check every year to see what the filing date is, and usually it will be from that date.
And there's another question about whether you need to do anything if at a certain point you are independent from your parents, and what's the difference between being dependent on your parents and being independent from your parents?
I think basically your age is going to be one factor, whether you're living with them, whether they're helping support you financially is really all it is. If you're over the age of 24, earning your own income to a certain extent, living independently, then that's really the bulk of what you'd have to take into account to determine that you're at that point independent.
And if you decide not to go to college, that cutoff is 19, not 24.
I think another important thing to note, that if your parents do make more money, the credits lessen, so you don't always get like the max amount of credits you would if you were filed under your parents. So sometimes it might be better to file independently, even if you are in school. I mean, I filed when I was a sophomore in college because I was going to get more money if I filed independently than with them. And if you're worried about, since they are taking care of your financial needs, you can always just give them that money that you're getting in return, because you're going to get more than they would if they had filed for you or filed you as a dependent. It's important to note, though, to make sure that if you are filing independent, that you tell your parents that you're filing independent, because if they try to claim you as a dependent and you filed independent, then the IRS may flag you because there's some suspicious activity. You can't both. Your parents can't file you as a dependent and you be filing separately as an independent.
All right, good job. And then there's a few more questions. So one question is, if you are living on campus, does that mean that you're living away from your parents if you're in college?
No.
Okay, so, yep, so if you're living on campus, it's only considered living temporarily away from home, so it's not, so your parents can still correctly claim that you're residing with them. Very good. One more question is, can we briefly highlight how an international person can file? So if you're living outside the country, that's a very good question. I don't know what services are available internationally. I imagine just postal service. I don't know. Does anybody have any experience of their H&R Block or any of the private service providers outside of the country?
I think when I filed, yeah, I did actually file a few taxes while tax years while out of the country, using one of the online service providers that the IRS had recommended. It was a fairly painless process for me. That's speaking as a dual Canadian American citizen. I don't know if it is meaningfully different.
Oh, and actually the person just clarified that they meant an international student working in the US.
Oh, I see.
Is the process different for that person?
So that would depend on if they meet any of the residency tests, I would assume. If they don't, there are two options depending on if the way you're making money while staying in the US, if it's connected with US business in any way, it's a graduated tax rate. But if it's not, if it's independent, you just happen to be here, it's a flat 30.
Yeah, and if I know that if you're a student and working and you're here on a student visa, that there are certain restrictions on which days you can count as for residency purposes. This is definitely a topic that's outside of what this presentation is about, but this will be something that I'll be raising with next semester students. Maybe we can do one specifically for international students. Yeah, so I know that the rules are different. If you don't have a social security number, you do need to get an ITIN. And then the residency rules are also different. So, but we will save that for another semester. I don't see any other questions. Thank you so much to this active audience. I think this was the best set of questions we've gotten for a really long time. Okay, so one other point that Carla mentioned in the chat is that international students should reach out to their international student office for assistance in finding help with tax issues. That's a really good point. On campus, there should be a point person to be able to help you with that filing requirement.
Make sure you're classified properly. So no matter what office you work with or who you're helping with, make sure you're classified properly.
Yes. Huge point. Thank you. Well, thanks everyone for this amazing presentation. Good job, AM crew, on the awesome presentation. And we shall see you. We have another one coming up at 2 p.m. So hopefully we'll see you then. Bye-bye.